In this video, we discuss 10 unusual ways that retirees cut their expenses. Coming up next on Holy Schmidt.
Holy Schmidt!
There are a lot of commonly identified ways to save money in retirement and in life, but this video is not going to discuss the things that you've heard before. We won't discuss things like paying off your credit card debt, growing your own vegetables, watching the grocery store handouts for sales, although all of those are completely valid, and if you haven't followed any of those, or one or two of those anyway, these all work and you've probably heard about all of them. But if you haven't, there are a lot of videos out there on common ways to save money. And these that I mentioned and others like them will be in these videos. There'd be no use for me to publish another Me Too type of video because frankly, I'd just be telling you something you already know. Then there are the 10 here. I imagine you have heard of one or two of these, but I doubt that you've heard of all 10, especially the last one. Or if you did, it didn't click because they weren't explained in a way that is relevant to you. Also, if you have others that are uncommon that you feel are important for others to know about, please put them in the comment section below. As always, I'll remind you at the end. All right, let's get into it. The first is one you may have heard of, but may not have fully considered, but in this day and age, you should, and that is to rent out a room in your house. Rents are rising all over the country. You have a lovely home and you have extra bedrooms because you are now an empty nester. Your kids are gone and you're not sure you really want to sell the house, so you have an opportunity to capitalize on the bedrooms that are now empty. This situation works out well for you. It also works out well for somebody else who you may consider a good possibility for a long-term tenant, particularly if there's someone that you personally know that is in need of a place to stay. It also may feel like when you had a roommate back in the day in your first or maybe even your first few apartments before you moved out on your own completely. Of course, if you get the wrong tenant, this could go very, very badly, so make sure you choose wisely. Point number 2 is to raise your deductible on your health insurance, your car insurance, and your home insurance. Let me explain. For a lot of insurance, the single biggest premium saving comes from raising low deductibles. This is because the largest volume of claims comes from the low end of claims, not the high end. Insurance companies get nickeled and dimed generally with 4-figure claims, but it's rare that it moves into the 5-figure or even 6-figure claim territory. Homeowners insurance is a little bit different because generally you either have no claims or you have big claims with the homeowner's policy, but claims are quite rare. Of course, think this through before you act on this because you don't want to be a heavy consumer of your medical insurance, for example, at the same time you're raising your deductible. The odds are not in your favor unless you have something called an HSA or a health savings account. Even then, the funds in that account can get depleted pretty quickly. The next unusual way retirees save money is by staying healthy. If you're healthy, you have very little, if any, claims. No claims are better than some claims, even if you have a copay, because there are things that are just not covered. Admittedly, sometimes staying healthy is easier said than done. Other times, it's just a matter of lifestyle choices. Generally, people do know which is which when it comes to their personal situation. There are a lot of ways to stay healthy or to get healthy. The starting point is obviously your doctor. See your doctor and get on a path to being a better and healthier you. The next point is reducing travel expenses. There are several ways to do this if you're in retirement that you can't do, or it's harder to do if you're not. The first is to travel off season. If you want to go to Europe and you go in the fall, it's going to be less expensive than if you go in the summer. And if you fly midweek and fly during off hours. Early in the morning is often less expensive than later in the afternoon because people want to sleep in, frankly. And always, always, always use a loyalty program. Travel expenses are particularly good for loyalty programs because almost everything ends up somewhere. When you fly, you have the airline loyalty program. When you stay in a hotel, you have the hotel loyalty program. When you rent a car, you have the rent-a-car loyalty program. You get the point. And this came up on a video a while back. Be very careful with mileage brokers. For those of you that don't know what a mileage broker is, a mileage broker is someone who goes and they buy miles off of someone at a discount price, of course, and they use those miles to book your ticket, also at a discount price. The problem is that many airlines don't actually allow this. It's not that it's illegal, you won't go to prison for it, but you could be in a very real situation where you think you have a ticket until you show up at the airport and they tell you that your ticket is not valid. The next point is to move to a home appropriate for your stage in life. Let me explain. If you raised a family in the house that you live in now, one of two things is happening. You love your home and you can never see yourself leaving, or you live in your home and it's too big for you and your partner if you have a partner. And now you're haunted with the dilemma of living in a house that it's too expensive to maintain, too much house for the number of people in it, and frankly, taxes are going to be higher in a house like that, versus leaving your safe place, one that you may have lived in for the last 30 plus years, to a smaller place that will provide you with a larger economic uplift. I will say, for some people, the savings is not insignificant. A smaller home could mean lower taxes, I mentioned that. It could mean cash back, or it could mean no mortgage if you're still paying the mortgage on your first home. Also, there are circumstances where if you move, you're in closer proximity to your relatives, often your kids, sometimes your brother or sister, and maybe even your parents, depending on how old you are. Of course, only you can make this choice, but know that you are not the first person to consider going down this path. The next point is use the library. Don't buy your books. One of the most underutilized treasure troves in retirement is the public library. People are using the public library far less today than they were 15 years ago because of the advent of ebooks, Amazon.com, and the fact that your book can come to you instead of you having to go find it. But the best part is that many small towns, most medium-sized towns, and every big city has a library that rivals even the most complete bookstore. The next point reduces your expenses indirectly, and that is taking classes for free or drastically reduced prices at the local college. Many colleges offer free or drastically reduced courses for retirees. They can do this because there generally isn't an additional cost to offer the class to retirees, and the publicity is fantastic. But the cost savings is a little bit more nuanced. It's not like flying midweek or renting out a room. Those and the others that we've talked about before are direct and measurable savings. But taking free classes has big financial benefits, because the fact is, if you're in class 3 or 4 hours a week, you're not out spending money on something else. The second point is that classes help your mind stay sharp, help you stay social, and keep you current, all of which is very important when you're in retirement. The next point is get rid of your landline phone. According to ARP, 64.2% of 18 to 24-year-olds are wireless only, but only 23.9% over age 65 are wireless only. This means that, well, 3/4 of you out there still have a wired landline in addition to the cell phone, because almost everybody has a cell phone, so you're paying for both. The reality is people used to keep a landline because they were worried that their cell phone was unreliable. But today, the reverse is true. Oftentimes, your landline goes out, but your wireless phone stays connected. So when you're looking at your phone bills, make sure that you fully understand that a big portion of what you're spending doesn't really need to be there. And the fact is, the packages that the cell phone companies offer now offer better rates and better long distance rates than you could generally get with a landline. The last point, one of the most important, although it is hiding in plain sight, is keep your credit score high. When you're in your working years, your credit score was there so that you could get a mortgage and get credit cards, basically. During those years, your credit score was one of the single most largest determinants of wealth, because if you could get a mortgage for 0.5% less or more because you had a good credit score, that was real money for 30 years in many cases. The same was true for a car loan. When you took out a car loan, they would give you an estimate when you went to the dealer, and that estimate was based on a credit score of 740 usually. Not a lot of people have a 740 credit score. That's considered very good, but the point is that when you took out the car loan, if you did have that score, you got the rate. But now you're in retirement and your mortgage is either paid off or it's fixed until it's time for it to be paid off. You're also driving much less, potentially anyway, for most of you, and that means that your car will last a lot longer. And frankly, a lot of retirees do pay cash for their cars. So on the surface, having a great credit score doesn't really seem to matter too much. But when you dig deeper, there are very, very good financial reasons for you to do this. First is that the insurance companies that you do business with will give you a better rate generally if you have a higher credit score. This is particularly true with automobile insurance. It's not just your claims history with automobile insurance, it's your driving record. Believe it or not, if you've gotten tickets, and also in many cases, if you have a college degree. The same is true with having a high credit score, because having a high credit score sends out a message of stability to the insurance companies. The best part is that in order to get a high credit score, the number one determining factor is your bill paying history. So set up your bills on auto pay if you are the type of person that does that. I do that with all of mine. If you don't like being on auto pay because people are reaching into your checking account and taking money out, just make sure that you pay your bills on time, put it in the calendar, and just make sure it goes out on time every time. As a reminder, if you have an unusual way to save money, make sure you put it in the comment section so that others can learn from your wisdom. Also, check out my video from last week on 12 key things happy retirees get right. Most of these cost nothing. This is Jeff Schmidt. Thanks for watching.